Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, July 28th, and it is 5:45 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup daily market insight video. Market state, we're in an uptrend for 3+ months now. Check the trend gauge over here. Still got the coveted four green arrows, meaning market leaders plentiful and acting fine. And the major indexes trending above our three time frames that we tracked: the short-term 21-day moving average, medium-term 50-day moving average, long-term 200-day moving average, still somewhat extended historically from the 50-day moving average on the S&P 500 and the Nasdaq 100, which is why that caution sign has been there. But it's been there since 7/3, and the markets continue to melt higher. So what happened today? After over the weekend, the U.S. and EU announced that they had finalized a trade deal, the largest in history, and this was met with a gap up on the indexes when they opened Sunday evening. But overnight, the high was put in, and the indexes were fading into the close, up over 0.5% at one point, but faded to the S&P opening up just by about 0.1% and the Nasdaq 100 0.2%. So very clearly faded, and some could interpret this as a sell the news event or a news failure because arguably it's good news. Should we have gone higher? Well, can you go higher when you're already historically stretched? And we're in the face of major economic data and a third of the S&P 500 reporting this week. So there's explanations as to why you would fade. Not a surprise really, but one thing we do need to keep an eye on is the serious strength shown by the U.S. dollar really all day today. And as the dollar strengthened, the index is pulled back a bit. Uh, Stocks generally benefit from a weaker dollar, and so do precious metals. While the dollar has been weakening, metals have just been forming a base, but they broke below, the gold in specifically broke below the 50-day moving average today. We'll check that chart. So definitely something to keep an eye on going forward. But we've also got FOMC Wednesday, PCE inflation data on Thursday, and the government jobs report on Friday. So no shortage of data that could either support the current economic outlook and or Jerome Powell's uh, positioning when he announces the expected no change in rates on Wednesday. We'll see how the market reacts to that, but really the reaction will be to the way he answers questions at his press conference. So here are the numbers on the day. The 21 over 21 list up 0.76%, 12 up, 9 down. Turbo 12 down about 0.5%, but this is excluding new member SMCI, which was up 10%. When something would really skew the data, we tend to exclude it to give a more um, true representation of what the average stock did on the day, but 6 up and 6 down there. The big eight up 0.65%. That was led by Tesla being up 3%. The RG8, this is our 8 growth ETF composite, just barely positive, and that's where the S&P 500 finished, just barely positive. But breadth was not strong. You see the RSP down 0.6%. Nasdaq 100, the strongest index, up 1/3%. Equal weight was negative. Slight losses for the Dow, mid caps and small caps. Global 60/40 down about 1/3%. Our flagship GROTECTION portfolio positive by 0.12%. TurboTection positive by 0.23%. Reminder, we would appreciate it if you would like and share and subscribe to our YouTube channel. That's Revere Asset on YouTube. That helps the algos get our content into the streams of people that are looking for advisors. All right, let's go to the indexes. We'll start with the S&P 500 here, and the high of the day was put in the first 30 minutes at 64.01. That is about 1/3% below the overnight high. We're going to keep an eye on this overnight high. which was 64.23. So about a 45-minute base, then we started selling off, making lower lows and lower highs before a bit of a pop into the close. Uh, Breakout still intact, and we're trailing the 8-day exponential moving average up above this breakout. But let's see. So Wednesday we were up. Thursday was tight, a consolidation day. Friday an up day, and really a tight consolidation day today as well. But if you included the after hours action Sunday night going into Monday, the candle would not look as good as it does in there, as this just reflects the daily trading. Let's go to the NASDAQ 100. Also, a significantly better looking candle if you include the overnight levels, but still up 1/3% as big cap tech led by Tesla did rule the roost today, we'll say. Let's go to equal weight S&P 500. Four tight days here, right near this the recent highs. Well, not the recent highs going all the way back to late last year, but unable to break out. And you can see we've been pointing out the relative weakness on the equal weight S&P, and that's simply because of the strong weights of the Magnificent Seven type names. Last big cap index we'll take a look at is the Dow. That's also had four tight days as well. Tight days good because the moving averages, which they're stretched from, are catching up to price. We prefer to correct through time instead of through price. So this is certainly decent news. How about the S&P 400 mid cap? Very similar setup, four tight days there after undercutting and reclaiming the 21-day moving average on a shakeout on 7/16. Russell 2000 flagging a little bit, pulling back into the base off of the highs that were set last Wednesday. So those are the major indexes. Let's go to the VIX. VIX up slightly today, but still with a 15 handle. Now this is let's go to the ETF here, UUP. You can see very clearly when the market opened the gap up and making a higher high and clearing the 50-day moving average, which has controlled this going all the way back till last year. So we definitely want to be mindful of a possible change in trend for the US dollar. It could be just be one day, but then again, maybe it's not. And there is a lot of inter-asset correlation that is tied to the dollar. Here you can see the candle a little bit larger. I think this includes some after hours trading, but very clearly, again, going back to, okay, we're going back to February because there was a gap down because of a distribution in the ETF. But we're going back to February was the last time the dollar was above the 50-day moving average with a mild close above that level today, but not clearing the highs of last week. So a little bit of work to do to get there, and we will report on this on our upcoming videos. Precious metals now, there's gold with 4 days down and a pierce of the 50-day moving average. Now, this happened again 3 weeks ago, and we went on to rally up to the highs of this range. But the top of this range is where profits are being taken. You can see the relative strength line in gold has been terrible going back to April. Silver pulling back as well, but just to the 21-day moving average, this chart looks much better. Gold stocks pulling back, but closing right on the 21-day moving average. Another thing we'll keep an eye on. Bitcoin, tight action, reclaiming the 8-day moving average. Ethereum breaking toward all-time highs, pulled back a little bit when it hit the highs of last week. Again, this isn't a 24-hour chart. This is a chart of the ETF that tracks it. On to bonds, BND, broad bond index tight inside day, TLT, 30-year tight action for 6 straight sessions now there as well. Price being down on TLT means yields up slightly on the 30-year, 10-year yield. Let's take a look at that. Mild up day for the 10-year. All right, let's go to your asset correlation. I'll point out what's important here. Note the red backgrounded arrow for the dollar. Certainly something we want to keep an eye on. News I mentioned, the trade deal with the ES and the EU, FOMC Wednesday, PCE inflation on Thursday, jobs report on Friday. I don't know if Jerome Powell already has these numbers by the time the FOMC meets, but obviously Trump's been putting a lot of pressure on him to cut rates, but the markets are not at this point pricing in a rate cut at this meeting anyway. Day count, so 8 day breakout, 2 days up, 2 days consolidating, 25 days up on the 8 day moving average, 65 consecutive days above the 21 day moving average. So very clearly long on the tooth on both of those. And a pullback or break below either of those would not be surprising in any way, shape, or form. Note, I've got that after hour 64.23 high highlighted. We do want to reference that when we're talking about overnight highs because we did fade off that level with the trade deal. Sectors that were strong today, semiconductors, mag stocks, oils, tech, and XLY, which is discretionary. Weak basic materials, financials, staples, utilities, real estate, and healthcare. A lot of weak sectors. VXUS is foreign stocks, GDX, gold stocks. Portfolio changes added to Palantir. There was a spike down intraday on some weird news that said the Pentagon is trying to start some different AI tools so that they're not as relied on Palantir as they are. That spike down. Usually the strongest stocks when they spike on some uh, weird algo-driven headline like that are a good chance to add. And we did add to our Palantir position today. On the other hand, FCX, some copper new. There's a lot of cross currents with the trade deals in copper. Our add-on buy on Friday went negative right away. We cut that. And Apple has made no progress since we did that add-on buy as well. We sold that buy for break even. Plus, they have earnings this week. So that gives GROTECTION a volatility adjusted beta of 1.36. For reference, a full portfolio of the S&P 500 is 1.00. 6.12% a balance at risk. Turbo bought Tesla today. Tesla initially gapping down on earnings, but has had some strength come in since then. So that added to the Turbo portfolio. Volatility adjusted beta 2.22, balance at risk 5.04%. So the bottom line on the day, indexes fade after US EU trade deal and strength in the US dollar. Keys for tomorrow, we're going to watch the S&P, the 8 EMA trailing it, and that overnight high of 64.23, the 8 EMA on the NASDAQ 100, the 8 EMA on the Russell 2000, and the recent highs of 22.83, and see if there's continued strength in the US dollar and how that impacts precious metals and or stocks. So that is our tail of the tape. Let's get into the two updated lists, which we do every Friday. We'll start off with TurboTection. Four new names in here. Let me get that. Let's take a look at the charts of the stocks that got cut. I have them in a list here. So here's what was cut. ASTS, not breaking the 21, but showing some weakness, and Ted and Connor decided they had some better names that they could put on there. AAOI, breaking the 21-day moving average. OUST, I call it oust, they call it oost, pulling back to the 21-day moving average. And IREN with a big failed breakout last week, closing on the 21 today, but getting punted from the list. The last four that I'm showing in this list are the four replacements this week. So these first 8 are carryovers. AS closed last week below the 21, but reclaimed it today, so staying on the list. KTOS continues to be strong, earnings in 3 days. LEU continues to hold up well, earnings next week. Sedge, 4 days of a pullback. MIR making a new high, earnings this week as well. Symbotic riding the 8 EMA higher. Viking Holdings continues to very nicely ride the 8 EMA higher. This is the setup that we love. TSSI reversing at the 30 level. So these are the four new ones. SSK, this is the Solana ETF. So pretty new name there. SMCI, old name coming back. Big move up today, up over 10% on above average volume. This is so let's check back on this. A weekly chart has had a massive move early 24, put in what looked like a blow off top, pulled back very hard. They had to restate some earnings. And then they had a big pop earlier this year, forming a base now coming up to the side of this base. I like the look of this one. SMCI Galaxy Digital breakout last week, pulling back. And finally, Sezzle regaining the list as it bounces off the 50-day moving average and regains the 21-day moving average. Let's go to the 21 over 21 list now. Let's talk about what we punted from there and why. CRCL, just no strength anymore. Looks like it needs a base close below the 21. So punted. DAL, zero follow-up strength after its earnings report. And uh, Love also reported earnings last week. And let's just say the sector strength is not consistent. So we took this one off. I took IBIT off. It's acting fine. But IBIT's fine, but let's just look for some stocks that are giving us a little bit of a better risk reward. The volatility in Bitcoin has really been taken out by the institutions piling into it. FCX, I mentioned this. We stopped out a half on the break of the 21. It did bounce at the 50-day moving average today. But that was taken off, and I took IREN off also. We talked about the failed breakout there. So there'll be 5 new names on here. We'll start off with what we own in the portfolio, which has a green flag here. Palantir continues to act well. GEV making more highs. Hood earnings in 2 days, consolidating a little bit. NVIDIA higher highs, continues to be very strong. Coin pulling back 5 days down, 6 days down. We sold some at 440 here. This is why we sell into a +4 ATR extension from the 21-day moving average. And this is why, but honestly, at no point did I think we'd have a 6-day pullback on coin to the 21-day moving average. MP making higher highs, riding the 8 EMA. We need to find a way to add into this. And AV gapped up, sold off, regained the 8 EMA by the close. These are carryovers. PWER has earnings later this week. CCJ also has earnings this week. SoFi earnings tomorrow. DraftKings could also have Flutter on here, but DraftKings tight for almost too tight for too long, possibly as it's making no progress off of this attempted base breakout. Could be waiting on earnings in 2 weeks. Reddit trying to regain some strength, up 4 straight days. DoorDash up into the 250 level and reversing. VST bouncing at the 21-day moving average. Credo breaking out after undercutting and reclaiming the 21 last week. And GDX just barely hanging on by closing on the 21-day moving average. So here's the 5 new names. APH, after a huge shakeout to both sides on earnings, this is resolving to the upside on decent volume over the last few days. After I understand it hit the pivot plus 20 to 25% take profit zone, but we're 4 weeks off of that, and we reported earnings, and it's resolving to the upside. So possible, very nice earnings and sales growth on this as well. ANET, this is a new name, and this has been on a very nice run as of late as it continues to carve the right side of a base. AppLovin also trying to get the right side of this base wrapped up. A-Lab gap up last week after several failed breakouts above the 100 level, continuing to exhibit strength, although squatting a bit today. And AMD, this is acting much better than NVIDIA. Serious volume coming into it. Look at the volume patterns back here and last week. And undercut and reclaim of the 8 and then 4 days up. Alex, who is our consultant, has done a lot of diving into this, and he's very impressed with their new chip and the prospects for sales for it. And you can't overlook the 53% earnings growth next year for AMD. So very possible um, that we will find our way into this, but it would probably be after they report earnings next week. And that's your 21 over 21 to go with the Turbo 12, and that's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone's 855 Real Wealth. That's 855 732 5932. Email my partner, Dan Stewart, if you're interested in becoming a client. That's dan@revereasset.com. And a reminder that our portfolios are designed to grow assets during uptrends and protect them during downtrends. And we detail every portfolio change that we make and our outlook for the market on these videos every night. The most transparent advisor that you will find. Please reach out to us if you're interested. And with that, I will wrap it for Monday, July 28th. I know I said January last week when I got the day typed wrong too. Don't ask me where that came from. It's awfully warm for January, but we'll wrap it for Monday, July 28th. This is Don Vandenbord with Revere Asset Management telling it like it is. Thanks for listening and have a great day.